Hello, everyone. I'm Brian Christie. I am co-chair of the Crowdfunding Professional Association, CfPA, and we're glad to have everyone here. If the person working on the technology can help us out, we'd like to make it more of a meeting group than a broadcast group. So we'd allow everyone to chat. But today we're really excited to have a conversation where we're going to have a recap of some of the things that happened at the Regulated Investment Crowdfunding Summit last month in DC, and also give us a chance to talk with and meet with some of the awardees, people who were recognized by the industry for some of the things they've done that have been really outstanding in their different ways. At the summit, the award ceremony came at the very tail end, so many people didn't get a chance to hear directly about the wonderful things that these individuals are working on. So let me go ahead and just give a little background on what happened and some of the things that happened at the actual summit. It was a two-day event. The first day was structured to basically be set up so that people could go meet with legislators and some of the regulators and to have conversations talking about some of those things that are important to the industry. Now, the Crowdfunding Professional Association, for those of you who are not aware, is the leading trade association representing the regulated investment crowdfunding industry, which we define as both Reg CF and Regulation A. There are a lot of people working on 506C, but as far as a policy perspective, we're very much focused on Reg A and Reg CF issues as it relates to our advocacy and our education and our advancement of the industry. Those are sort of the three pillars that we focus on at CfPA. And if you want to learn more about CfPA, please go to cfpa.org or crowdfundingecosystem.com. There's lots of ways that you can engage with the organization. And so the and membership's quite cheap. It's quite accessible. If you want to get involved, it's $10 a month for an individual, $50 a month for a corporate membership. And again, we throw a wide tent, so a broad tent, so we'd like lots of people to feel have access and be able to join. Now, one other thing I'd say about CfPA, well, a couple other things before we get going. One is that we operate as a nonprofit. All the board members are volunteers. The members are representing all aspects of the industry. It's both the platforms, the portals, the lawyers, accountants, marketing firms, basically anyone who has an interest or involvement in the industry. As an organization, we operate with various committees who focus on particular issues, and then we have a handful of committees that I'd point out. We have the conference committee that really plans the summit, and was led by Angela Barbash and Elizabeth Eichhorn this year. We have a policy committee that really prepares the positions of the organization through a consensus-driven process. That's been led by Jenny Kassan, who's our current president this year. We have a growth committee that really focuses on growing the association and the industry indirectly. Jason Fishman is part of that, or is leading that committee. We have an SEC Affairs Committee, which, hey, Jason, thank you for waving. So we have an SEC Affairs Committee, which I'm leading. We have a Tax Innovation Group, which I co-chair with Devin Thorpe. And we have a chance for other committees to be formed if there are people who show some interest and are able to, they participate and they want to lead that area. And so we have a couple others that are under discussion. Again, love for you all to join and to participate and to lead a committee as part of the association. So, so there's a few things I want to talk about what's happening in the industry first and the summit a little bit generally before we turn over to our panelists. And first, for those who are unfamiliar, regulated investment crowdfunding is growing. To date, we have had more than 6,000 unique issuers that have run campaigns raising close to $6 billion. And that has been by investments by over 3 million people, individuals who've come out and made investments through regulated crowdfunding. And the interesting thing is that on the issuer side, the people raising money, they really represent the sort of mosaic of American entrepreneurs. 25% are female founded companies, 24.5% are minority founded companies, which is a real contrast to what's happened a lot in the VC world, where those numbers are 2% and 1% respectively. In the industry, from our perspective, or at least from my perspective, it's relatively new. The game really got going in 2021. Although the Jobs Act was passed 2012, it took 4 years for the SEC to do the rulemaking, handful of years for the initial practitioners to get going and to revise that. 2021 is when a new set of rules came out, and that's really, in my mind, where the sort of starting blocks were for the industry. Since then, we're seeing some activity that's allowed for exits, and according to King's Crowd, they provide some info that says that there have been 95 mergers and acquisitions out of the 6,000 companies that have raised. There have been 500 closures, but you look at that rate versus startup rates in general, it's very strong. And there have been 38 IPOs that have happened from companies. So this is, really showing that it's an industry that's advancing and starting to mature. I think we're still in the first inning, but again, it's moving in a very interesting direction. There's been a lot of discussions that we've had as an organization about how to improve things, and to both in terms of the mechanics of doing crowdfunding as well as what happens on the regulatory policy side. And again, we'd invite people to join us to get involved to help move things forward. So with that, I'd like to really turn our attention to the awardees of the event, or of the summit. And before that, I do that though, let me share just a screen if I can really quickly to share a couple pictures from the event. So give me a second here. I think you all, if you can see that, you'll see that some pictures. Do you see my screen? And nod. Yes. So just wanted to share a couple pictures. This was Jenny at the event, handing out an award to Brad there, um, and then here's just a look at all of you awardees, which we were really pleased to see and have a chance to interact with. And finally, here's just a look at the stage of the event, where again, people were there. It was again a relatively small group, but it was a very focused group, and we had E360 TV broadcasting things at the very same time. So it ended up being thousands of people were actually there. So let me stop sharing there. Have I stopped sharing?
Yes.
I have. Okay, thank you guys. So with that, let's go through, and we were initially going to start with Eve, but she apparently is not able to make it. She's at a conference and trying to get away. But I'll just mention her. If she comes back in later, we'll give her a chance. But she was awarded what's called the Social Impact Award. And so this was an award that was acknowledging a Reg CF issuer whose work has made a measurable and lasting impact, a positive social impact. And so her company, Small Change, it operates in the area of real estate, and she really helps to revitalize communities in which she's been operating, trying to deliver really a double dividend. So one that's both social and financial. So next, I'd like to turn our attention to Paul Lovejoy. So Paul was the recipient of the Pay It Forward Award. This celebrated a CfPA member who's embodied the spirit of generosity and leadership by paying it forward within the crowdfunding community. Now, Paul embarked on a very interesting, I call it experiment, but it was where he decided to take each day of the year and to invest in a new startup through regulated investment crowdfunding. And so really, so I think, was it 365 or 366? How many investments did it end up being, Paul?
Well, it was a leap year, so it was 366 days. However, as you know, sometimes companies don't make the minimum or things get canceled. So there wasn't exactly 366 investments. There were a couple of cancellations. And then there was also some other factors with some Reg A offers where you could, with $10, you can be invested in 10 different small real estate development loans. So the amount of investments that I have are actually greater than 366 just because of that fact. So
So Paul, why don't
the
you?
reason,
Oh,
yeah, the
yeah.
reason
Sorry.
why.
Yes. Go
Yeah,
ahead.
so I'm a registered investment advisor, a financial planner, and the way I see our public markets, I don't see it as a diverse place to invest. Three institutional investors dominate our public market, and they're really controlled by algorithmic trading, which optimizes for maximum returns. And what's ended up happening is they're just a magnificent seven stocks where most of these holdings are in that these institutional investors have. So I see the stock market as something that isn't really what it was intended to be, as a diverse place to have safe investments or safer investments. So I wanted to prove that community funding works as a financial planning strategy, or through these, regulated investment crowdfunding, small businesses, and what ended up happening was is that just with small real estate loans alone, 432 different one of them I invested in throughout the year. Small businesses, over 70 small businesses through Reg CF I invested throughout the year. Regenerative agriculture, over around 15 different regenerative agriculture projects I invested in. And a lot of these, most people think of regulation crowdfunding as equity, but my allocation is set for more of a financial planning model. So I had 50% debt, 30% equity, and 25% real estate. And so what it ended up happening, it's been 20 months since I first started it. So I only invested 12,000 total during that year. Since then, I've already received a 33% cash flow return, meaning that 33% of the money I invested, I've already gotten back and I've reinvested. And this is just in 20 months' time. And that's not only that, that's including if I include the equity number. So the diversification is blows away anything our public markets have to offer. And I think it's been a resounding success for me, just to see that, yes, it is possible. And I've actually experienced what it's like to be a customer too, on a very deep level, to have to engage with the different platforms, ask them questions, see what their customer service is like. So it was a tremendous experience. I will say, when I first started, I had this kind of ego, like, oh, I'm a good investor, I'm a crush this. Like by month 6, I was thinking, whoa, man, boy, how little did I know. When you invest every day, do your due diligence every day, you just become a better investor. And by the end of the year, now I don't think I'm a great investor anymore. I have a certain understanding that I realize that there's so much more to learn. And it gave me some humility about which investments that I choose going forward. It was a tremendous experience.
Now, Paul, did you after at the end of this process, did you have any particular sector you became your favorite or that you felt most knowledgeable about?
Well, I'm surprised at how much I know about restaurants now. That is
Okay.
something I'm totally clueless on, the whole restaurant industry, but there's a lot of small businesses raising, $30,000 for a new oven.
Hmm.
And so just to see their financials, their business model, that was something that's really I didn't expect. I didn't expect to understand regenerative agriculture as much as I do now, and how much I love it. I think it's a wonderful thing to invest in. I didn't know there was a too big to fail food system. That's something I learned throughout this year also. for meat packers control. It's like the banks, except with packers. It's a crazy situation. So there's a lot of things that there, and that's a really interesting thing about being an investor in this space. You know, I'm learning about medical tech devices. I didn't really know too much about that before doing this, but when you're doing your due diligence process, you're learning these new things. So I got to say, it was very hopeful because I literally am looking at the hopes and dreams of these entrepreneurs every day. And it motivated me. I wasn't like, oh, I got to make another investment. I was like, cool. What can I learn today? It was really awesome experience.
So how
I have a
much time?
question, Brian.
Oh,
Can
sure.
we do other questions as well? Yeah.
Sure. And by the way, I'm going to invite Scott or introduce Scott McIntyre as vice chair of the CFPA, as well as Jason Fishman, who's secretary, who will be VP next year and the president of the organization the year following. And I was hoping we could connect all of the audience, but apparently we're not. So at least we're connecting the CFPA board members in this as well. But go ahead, Scott. You have a question.
I'm sure we'll have a lot of questions to give, but Paul, I think a lot of people are probably wondering to themselves, with a 33% return, not even including, what gains you may have from your equity plays or real estate for that matter. When are you going to package this up and start offering it as an RIA?
Well, that is exactly what I'm doing right now. It's a big process. One of the big hurdles of the industry is the inability to track so many different loans. The portals, they just haven't come up to speed with investor dashboards that you see on Charles Schwab or some of these other more established sites. So the but here's the really cool thing. I have met people through my last webinar that I've been contacted by through the CFPA, and now I'm in talks with King's Crowds, the different portals to get. The first step is to get a universal CSV download from these different portals with the debt. And so it's kind of cool. Like I said, oh my gosh, here's this problem. And now the industry has rallied around, and we're literally solving a problem of inability to track what your returns are through the investment. The portals, they don't do that. But at least to be able to have the investors be able to track it, I think is really important. And setting up at least a Google Sheets or spreadsheets that you can plug into. And with AI, it makes it so much easier to take a universal spreadsheet and to say, hey, help me figure out my returns. That's been the big piece that's been missing.
Well,
So,
Paul, as you get closer, sorry, Brian, just a follow up. I was going to ask that same question, was how do you track all of your investments with 300 some out there? But I think that this harkens back to a lot of the educational programs that we never had in my high school, obviously, but a lot do now, where they set up to teach finance and investment to students and allow them to create faux stock portfolios to see how they would perform in the real markets. I'm thinking that there's a real education play that would benefit a lot of students to understand the impact of their money in their communities through crowdfunding, as opposed to just playing the big board. So when you get ready for that, Paul, let's have that discussion. So,
All right. Yeah,
all right.
I love it.
so
Love it,
Paul,
Scott.
yeah, and so I just if I could, you were at both days of the summit, and so before I move on to other panelists, maybe just give us your perception or reaction to what did you participate in the day prior in some of the legislative things as well as the summit itself. Give us your reaction to the summit in general and things that you may have learned while you're there.
First of all, I am blown away by the CFPA. It's this really small group of individuals that are volunteers, and the amount that
Thank you.
this organization can accomplish, it just blows my mind. I've been involved with organizations that don't do half as much with twice as many people. It's insane how efficient and effective and passionate that the people are in this industry. So the first day we were doing the advocacy, and I was so impressed by the leads in each of these advocacy groups. They knew exactly what to say, active listening. We had other members chime in at the exact right time, the first meeting, I didn't really know what I was doing, so I just kind of watched and saw. But later on, during the meeting with the Kansas senator's office, I mentioned how I invested in a family farm in Kansas, raising for a tractor, $100,000. All of a sudden, the guy was like, "What's an RIA from Hawaii investing in a Kansas tractor?" So it was kind of it created stories that like would stuck out into their heads, and really I was able to say those things because I watched the members of the CfPA who have been here for years and done these advocacy meetings for years, saw how they did it, and I was like, okay, I'm going to try and contribute in what I know in the best way that I can. So the advocacy meetings was really what a great learning experience that was. So impressed with the CfPA members. It was awesome. And then the next day, the information that I learned from a lot of these panelists, Mark and Brad and Gene, what they're doing is incredible. And actually getting to talk to them and ask them follow-up questions and in some of these other social settings was so rewarding for me that this was a real highlight for my professional career was attending this summit.
Well, thank you, Paul, for that feedback. That's wonderful. We really appreciate it. It's, again, as you point out, it's an all-volunteer board. We work really hard to make an impact, and it's great that you're there to tell stories directly to people who are on the Hill making decisions, because does have an impact across the country, and businesses are able to take advantage of it. And to the extent we can tell those stories, there'll be more interest in this sector, both by other issuers as well as by folks whose support we want to see on the Hill. So thank you for participating and being part of that. I want to turn
And thank you
attention.
for the comments. I can say after 13 years of doing this, Paul, that's the best and finest we've ever heard. So thank you so much.
Yeah, I should get a testimonial of that. And I just wanted to add, I was part of the meetings on the Hill last year and sat along Paul this year. And it was profound to see the response from the staffers. I'm amazed by how much the Hill cares about individual issuer stories. But to hear their fascination with Paul and the investor side of the table, I think really resonated. And I'm seeing it in the follow-ups as well, too. Also quoted Paul a few times since the event. So yes, your impact definitely stood out. The fact that you're the man who invested in a deal every day, I've heard repeated in several circles since.
So hopefully we'll get some copycats, people who will do the same now. So he'll be inspired to do the same.
You got to pay it forward, Brian.
Pay it forward. So, well, you deserve the award. Thank you for the contributions you've made to the industry. The next award we want to talk about, we call it the Rocket Launch Award. And so goes to recognize a company that's gone from 0 to 4.5 million or more in 180 days or less. This is under Reg CF. So we're celebrating an explosive Reg CF debut that demonstrates rapid success and momentum. Now, I will say as a disclaimer that most companies don't reach anywhere near that amount when they do their raises on Reg CF, but it is appropriate, and there are certain companies who can hit that quite quickly, and there are many companies who go in with the intent to raise that amount. So with that, we want to turn to Brad Larshan, who's with Avadain. And so, Brad, welcome. Please introduce yourself. Tell us a little bit about Avadain, your raise experience and how it went and what you do and your raise experience, and tell us sort of the organizations you were working with to reach that.
Great. Well, thanks a lot, Ryan. It's really great being here, and I enjoyed the CfPA meeting in Washington, and I really benefited much more than I thought I would. You guys are doing great work, so thank you so much. So Avadain, it's an overnight success. We began in 2016, and if you don't count the last 9 years, it's just a rocket. But seriously, what we make is a material called graphene. And back in 2016, the inventors of this technology at the Fraunhofer Institute in Germany foresaw that what industry would need are large, thin, and defect-free graphene flakes, which are an additive material to make thousands, tens of thousands of products better. Most people haven't heard of it but in a few years from now, it will be ubiquitous with products and advertising. And so we began backing that in 2016. And lo and behold, they were able to make this material. Other people were making material that was very much suboptimal. And now we have the only technology that is known in the world to be able to make this particular super material. So that's really what Avadain is about. It's a material revolution. You have the steel age, the iron age, the bronze age. I think we're about to enter the graphene age. In fact, I really think we're already there. And in hindsight, history will look back on it and say, yes, it indeed happened. And hopefully Avadain was pushing that forward. So that's what Avadain does. We don't have any competitors because no one else in the world can make our type of material. There are more than 400 companies making suboptimal material. They compete with each other. So we don't see ourselves as having competitors. But based on my experience, what we did was we tried to put together the best team we possibly could when we started fundraising. And we did that in 2022 as an alternative to venture capital. And what drove us was that VCs were telling us they thought, our market cap was 5 million and they would invest only on that basis. One said it was 2 million. We disagreed. We thought, we had patents and a lot of things going for us. So we just tried and experimented with crowdfunding, and it started with finding the right marketing agency. We used DNA, Jason over there, and learned a whole lot quickly about how to navigate crowdfunding, what it was all about, how to make it work. We decided to go on the Net Capital platform because they were relatively small. More or less, they had a lot of focus on technologies versus other things, healthcare or movies or what it may be. So we thought the audience would be there. And then internally, we hired a few people, one of whom was our shareholder engagement manager, which I would advise any startup to do, because that communication with the shareholder, both during the raise and after, is an incredibly important piece. So in something like, and Jason knows all these statistics by heart, so he can just interrupt me and correct me. But in something like 4 months, we raised 1.36 million and stopped because we thought it was too much work, and we thought based on the success we had, we could probably do another crowdfunding round at a higher valuation. So the first one was 1.36 million. The second one was we raised the cap 3 times. We started out wanting to make about 3 million or something like that. Then we raised it to 3.5 and then finally to 4.5 million. And that was in 2023 or 2024. And then we thought, okay, we're going to do this one more time. And so this time with the accumulated learning, we used our marketing agency to hit what we call the singles and doubles, meaning bring in investment every day. So we have the appearance of momentum. And then my job was to really go out there and meet with high net worth people, strategic partners, and get larger investments. And lo and behold, I told Jason that I thought we would be done by Halloween. So I wanted to start making plans for how to sell it. We started in March, how to celebrate Halloween and in style, that we would have a successful raise. The first day we raised 1.275 million. And really in just over 30 days, we had raised the whole 5 million. We kept it open for a total of, I think, 43 days because we were having collections problems with people who wanted to withdraw, people who didn't want to invest quite as much, and so forth. So we were $12 shy of 5 million at the end of 43 days.
Okay. So Brad, tell us, I mean, I think there's been at least if you look at the popular press, there's always been a little bit of a narrative around crowdfunding that it's good for something that's has a high profile with consumers, something that, but you're sort of like an industrial materials company in some ways, right? So
Yeah.
yet you were able to raise the max, which I think goes against a little bit against that narrative of, oh, it's only for something that people highly, recognize. What do you think was some of the success toward that? Like how did you find your tribe?
So there are two pieces to that, right? The first piece is what DNA as the marketing agency did for us. And I think, they just used the best practices in marketing and messaging and everything else. We also had very active outreach through podcasts and through meetings, with investors online. And there were enough people who were intrigued by the story of how graphene can change manufacturing
Hmm.
that they were attracted to this. What we found was that our typical investor was a male, 55 years or older. Most were 65 years or older. They had a much higher investment than you would typically see in crowdfunding.
Hmm.
Most of them had been in business or had a role in business from what we could tell. And so our message was you missed out on plastics as an investment in the 60s. Don't miss out on this one. And
FOMO.
and there was a real component of leaving a legacy, both to make the world a better place with their
Yeah.
funds and for their grandchildren and so forth. Then on the other side, meeting with the high net worth people, something along, we have 3,500 investors, something along the lines of 200 or less invested, 80% of the revenue that we received. Um, and the number of people who invested 25,000 or more was like 60.
Hmm.
But we got checks for 500,000, 100,000, lots of $100,000 checks and in between. And there, what I think it was is that we really had a solid team, a very disruptive product, a lot of patents around the world, and a consistent message of what we were going to use the cash for and how we were going to deploy our business model. And
Hmm.
so crowdfunding we used just to make it easy, to keep our cap table clean. We have under 50 investors on our cap table.
Hmm.
Um, and we've raised $19.2 million. So that worked. So they understood and really, I think it resonated with them that crowdfunding was a really great way for us to drive the company forward. Um,
So, yeah, so if you have you been to any graduation parties where you've said graphene to the young graduates as at
yeah,
the
yeah, and we did a whole DNA prepared this meme with Dustin Hoffman talking to his father's partner, and he
okay,
said, "I have one word for you,
graphene.
plastics."
I
No,
see.
cross it out, graphene. In
Graphene. Good, good. I
fact,
like.
I'll see if I can find it at some point during this to show you what it
Yes,
looks like.
please share. So, Brad, I'll ask you the same question I asked of Paul, and which I'll ask the other panelists as well. This was your first summit for CFPA. Tell us a little bit about what you learned or what you feel you got out of it.
What I got out of it, I mean, I learned a lot because, I'm very focused on graphene and what we're doing. And then we have another company coming along that converts CO2 into battery grade synthetic graphite in one pass. And so hopefully that the testing will continue and it will pan out. And next year we can talk about that. But in the meantime, really, I enjoyed hearing the breadth of experiences that people were having through crowdfunding and the successes that it was bringing across the board. I've always been with my blinders on, and and when I went to the CfPA meeting, I saw that there was a big, beautiful world out there that I didn't appreciate. And, the work that people were doing. And that to me was eye-opening.
Right. Well, yeah, thank you for that. Appreciate that. And so, with that, Scott, did you want to
I had a
interject
quick
a quick
question for
question?
Brad. Yeah,
Sure.
so Brad, with the success that you had, I'm certain a lot of more conventional fundraisers, market makers, if they're aware of your success, would probably be looking at you for your future plans. Do you have intentions to grow beyond where you are now? What's your strategy for the next phase?
Yeah. Yeah, we were blessed when SVB, Silicon Valley Bank failed. JP Morgan moved into that space, and they started a program where they were going to recruit as customers the most promising disruptive technology companies in the country, and they've been quietly doing that. We were really blessed to be one of the first that they asked to join that program. And so I was in Boston 3 weeks ago, and they've offered to act as our investment banker to raise additional capital. So we're probably going to raise somewhere between 10 and 15% of our equity in that's not, I'm not saying that correctly. We're going to issue shares, sell shares for 10 to 15% of our equity, which would be between 7.5 and 11.5 million of cash. And it's not a foregone conclusion that JP Morgan will do it, but they're seeking internal approval. And it was their idea. And I think that then would be the last fundraise we would have to do.
So
Wonderful.
thank you for that, Brad. Next,
Brad, just want to ask a quick question.
sure.
There's so many different insights to take from the success of Avadain, of your capital raises, that I believe issuers and service providers who are tuned in now and are going to be watching the recording later would find beneficial, valuable. I know I could provide so many other details. That second campaign, that 4.5 million, and you pushed the limit back several times. I like to point out the timeline where it took 4 months to hit that first million, took another 2 months to hit the second million, only took a month to hit the third million. And then you saw the 1.5 million in, I believe, the 3 weeks to follow, given there was a selling out aspect, closing date, recall the large days, and can share with you notes that we had internally here. But something I pointed out on a panel at the summit, and I point to you about this regularly, that the most proactive founders have the most successful Reg CF campaigns. And you were hitting those home runs. We were, hitting the singles, doubles. And there were some larger ones in there, I'm sure. And
Oh,
the
yeah,
audience from that
absolutely,
second campaign translated over to the third campaign, why the audience is so valuable. But you were able to bring some very reputable names, thought leaders, investor groups to your regulation crowdfund campaign. How do you get George Gilder to include you in his report and his email to his newsletter followers, or the Harvard Angels to say, hey, we're going to showcase Avadain? I could go on and on and on with the list of third-party validators, but how are you able to put your time, your effort into successfully getting those promotions?
Well, I'm sitting here blushing, and my preference would be to turn off the video and the mic and let everybody else answer the question. So it's really about thinking how to correlate what we can do with graphene with interest groups and people who could help us, who would see that as a good fit for them. So George Gilder is one of the preeminent stock pickers in the country. He's in his early 80s now, but he's the one who allegedly, at least according to George, told Ronald Reagan to pay attention to semiconductors and get behind that. Anyway, so George publishes a regular investment newsletter, and occasionally does endorsements for companies. And so I would say that for the second campaign, which you referenced, Jason, his endorsement brought in probably in 2 or 3 weeks $1 million. So when we saw that ramp up, that was really part of it, was that. I'm also, really conscious of the fact that the media can help you or hurt you, the news media. Earned media, which means that they cover us because it's a good thing, not paid media, which you pay for and nobody, it gets whatever attention it's supposed to get. Anyway, so we also take very seriously journalists. And then, with the Harvard Business School Angels, it's just a question of keep pitching until some group gets really excited. And what we found was that the more sophisticated the groups were, the more graphene resonated with them.
I would say it's quite a tribute to you to get George Gilder, who's still seen as a futurist at age 80, to get excited. So that's, kudos to you on that. So if I could move things along just to go to
Sure.
the next one, and Jason, I encourage you at some point to do a separate webinar highlighting Avidane if you could. And so I think there's a lot of lessons there that would be helpful to people. Maybe that we set that up as a separate webinar sometimes of looking at campaigns like this. But I do want to turn attention to our next awardee, the Cool Innovator Award. This was Gene Eidelman. Is it Eidelman? As I'm pronouncing it correct, Gene? Yes, and I think you're on mute. So this is with Azure Printed Homes. Now, the Cool Innovator Award, it honors the groundbreaking, first of a kind or eco-friendly project that has set a standard for sustainability and a greener planet, and that can take place in either Reg CF or Reg A. And Gene, I think you've conducted a number of different campaigns. So please tell us a little bit about your campaigns. Tell us about your company and why people consider it a green company. And then we'll like to hear a little bit about some of the crowdfunding that you've done.
Sure. Brian, thank you. So my business partner and I started Azure Print Homes about 3.5 years ago. But I've been in real estate development and construction for 35 years. So my whole adult life, really. And we determined to find a way to build faster, cheaper, and with less environmental impact after doing this for all these years. Just frustration with getting projects over budget, beyond schedules, and all the trash that we generate in front of every project. We do, and everybody else does in the industry. Really, COVID was a huge help to us because we had time on our hands when we weren't running around and traveling. It was us sitting in the office. We sent our whole accounting, business development team work from home, and our construction guys were building projects. And so the idea came during COVID to first of all, was to build in the factory, because it just was so much uncertainty sending your contractors to a site. You don't know what they're going to find. During COVID, homeowners wanted to play with kids in the backyard while we were building an ADU, so on and so forth. So there was many reasons why building in the factory made sense. And people say, well, you're in LA, it's always nice there. Well, it's nice here, but we expect 1 inch of rain tomorrow. So even in LA, there's weather. And then if you get real busy, we work evenings into the night. We work 2 shifts now, and the weekends. Again, in many municipalities here don't allow you to work on the weekends, and definitely just practically not practical to work on in the evenings. So all of it started to make sense. So first decision was to work in the factory. Then we looked at other companies that were 3D printing with cement. We didn't like using cement because of environmental reasons, and so we developed the process to use recycled plastic and fiberglass to print our modules. And so that's a little bit of background on the company. In terms of fundraising, so all this happened 3.5 years ago. Those who are other entrepreneurs know it was almost impossible to raise VC money at that time. And so I've started previous businesses. My first startup, I've raised money for VCs. And people say, make 100 pitches and the 101st will bite. I've made over 150 pitches. There was no biting. So after doing this kind of a constant amount of time, somebody suggested crowdfunding, and so we started our first campaign just a little bit over 3 years ago, and we've done now 6 campaigns, all CF. You're gonna ask what you like the most about the summit, right? Talking to Brad is where I spend most of my time talking to him, because clearly he's doing something that I didn't do correctly, because in 6 campaigns we raised I don't know, $2.5 million. But we've also did some Reg Ds. So we've raised $7.5 million in the last 3 years. But I find that I learned a lot about crowdfunding, and I have other ideas. And actually going to be launching, being part of a group that's starting a new venture just in the next weeks. I've strongly suggested for them to use crowdfunding to raise capital for a startup.
That's great, Gene. Just getting back a little bit to the company, people can buy your product today. Is that possible,
Oh yeah,
or
yeah.
not
No,
yet? So,
yeah, we actually did all of the R&D before we even started. This, as I mentioned, is my first business. I was not comfortable, and that may be my at fault. I wasn't comfortable raising money before I knew it would work. So we have done ton of testing, and they already had an operating business with just as general contractor before I started raising. But yeah, we've now shipped over 150 homes. We're going to do about 7 million in revenue this year. And we'll do 4x that next year. So opening second factory, expanding our first facility. So yeah, definitely now reach scale pretty quickly, and crowdfunding helped us a lot to get there.
where are these homes located around?
Yeah, so our factory is in Los Angeles. We're one of the very few prefab operations here in LA. The only one producing residential modulars. And while majority of the product has been shipped around California, we've now shipped to Colorado, Texas, Georgia, South Carolina, Arkansas, all over the country, and opening our second factory in Denver in March.
Right, that's great. And I think that bringing sustainability, low cost production to the housing market is a great, very ambitious, but a great goal. So,
we have on one hand shortage of housing that's just getting worse and worse, and at the same time this excess of waste. So plastic was a good idea, as Brad mentioned, but we have so much of it now. We have some 308 million tons of plastic gets produced every year. Only 5% gets recycled. So our landfills and oceans are getting filled with plastic. So there's gotta be a way to use some of this material.
That's great. I think, I mean, we're all plotting for these types of solutions to get in place so that giant patch in the ocean disappears, right? They don't,
Right.
So, well, thank you so much for your contribution and for participating, being there. We'll turn attention now to our last awardee. This was for the Trailblazer Award, which recognized a pioneer in crowdfunding infrastructure development who's paving the way for the future of Reg CF and Reg A. And that's Mark Alanowitz. Mark, thanks for joining us. And Mark, you've been around the world of crowdfunding since crowdfunding, as long as crowdfunding's been around.
I feel
And
like
so,
it, yeah.
yeah. So you, I think that you were more imparting wisdom as opposed to maybe absorbing it at the actual event. But give us a little bit about your background, how you came to it, and also some of the things that you've done that have been really the part of the trailblazing part of the formula.
Sure. So thank you for having me here today, and certainly thank you for inviting me to your event. It was great to meet everybody that's in the industry and kind of see it from a different perspective from where I sit. A little way background, I've been in the business now for over 35 years in terms of being registered, and we have really focused on all aspects of capital formation. So when Jobs Act came out, I got very excited because I'm a small cap underwriter, which means primarily I deal with what I would call nano cap, or really micro cap, even smaller, sub 1 billion in terms of market cap. I know those numbers are a little bigger than what we're talking about here today, but in the eyes of Wall Street, it's really the very small end. And we have seen over the years, especially coming out of the late 90s and into 2000, that the small cap underwriting community was getting smaller and smaller, and the ability for entrepreneurs to be able to raise capital was becoming harder and harder. And Jobs Act, we saw as an opportunity to really bring back the small cap IPO. So I started going to a lot of events. I sat on panels. I would listen to the webinars. And everyone was so excited about Title III of the Jobs Act, which is what we're talking about today, is crowdfunding. But I saw there were two other areas that got me really excited, which was Title II, which was 506C, and Title IV, which was Reg A plus. And my issue with crowdfunding is that it's not a great opportunity for entrepreneurs to be able to raise capital. I mean, we heard the success stories just in the last few presenters. But what I was looking for was the next evolution where we could provide liquidity, where these investors would be able to have an opportunity to get an exit strategy sooner than later, and giving companies the ability to provide that liquidity strategy. And that's where Reg A, Title IV, came into play. And I looked at it and I said, this is a great way to make IPOs popular again by exactly what we're all talking about today, bringing fans, consumers, customers, affinity groups, and making them shareholders, but having them to have the ability to trade. So I went down to the New York Stock Exchange. I spoke with them. I said, I got this great idea. And they kind of like literally burst out laughing. And they said, are you kidding? This is like the flying car nonsense. We're the New York Stock Exchange. We would never do this. And after a few hours of talking to their attorneys and market reg and debating it, they said, you know what? You're right. So we ended up doing the first IPO onto the NYSE American, or it was NYSE market at that time. It was a company called Myelmo. We barely squeaked by with $7.5 million. We got listed, and in a matter of days, the market recognized the opportunity, and the stock ended up trading up from $7.50 into the mid 20s and traded millions of shares. So it showed the power of the crowd. And after that, we quickly did several onto NASDAQ, and then we took a little break because what we saw is that it became a little more mainstream. And one of the things that I would say the negativity of this exemption is that you don't need to be a broker dealer or what I would call a true investment bank in order to facilitate. There's pluses and minuses to that. It's great that an issuer can go out and raise money on their own, but there are a lot of broker dealers that popped up that weren't acting in the capacity of a true broker dealer. They were just basically being a compliance official, which meant that entrepreneurs were doing valuations and raising capital at money levels that really didn't make sense. And we saw the pain and suffering that as those stocks came out, they immediately plummeted to what they were truly worth, not what the crowd was willing to pay. And I think we all have that responsibility, even in crowdfunding, to make sure that the entrepreneur truly understands what they're doing from a structure standpoint, valuation standpoint, and making sure, because these are your customers, that they're not going to lose money, that they're going to support you and help you grow to the next level. So fast forward, we got back into the business after taking a short break after COVID, and we've been very active and doing very sizable, well-known, iconic brands. We just most recently had great success with Newsmax. We raised $225 million in a private for them and a $75 million IPO, Reg A IPO onto the New York Stock Exchange. Investors that participated in the IPO, there was a lot of irrational exuberance. The stock within 2 days went to $240 a share. It should have never done that. But if you were lucky enough to buy $10 stock and sell at $240, you did quite well. We sold that $75 million out in 4 days from 30,000 investors. And on the 225, we had 9,000 investors participate. It took about 9 months to do. And that's opened the doors. We're now out in the market today with LA Times. We're raising up to 500 million. It's actually not LA Times. It's called LA Times Media Group, which is much more than just an old stagnant newspaper. It's actually a very, very exciting new media company that's in esports and in modern studios and other types of things that all come together. We're working with a company called Parler Technologies. They're an app. It's the Parler app, growing very, very rapidly. Large following, large social media base, large passionate crowd, like what we saw with Newsmax. And those are the type of offerings that we're doing. And then what we've really now translated into, or transferred into, is doing Reg A's for publicly traded companies. So like the ability to do it for a private company coming public, that creation that we were, and methodology that we adopted and created, we've now created a new instrument that we use for publicly traded companies to utilize Reg A that doesn't have the toxic features of structure and all the other things that we experience in the capital markets today. And we just finished a $10 million raise. We just did a $8 million raise. We're about to go into the market for a $15 million. We have the other thing, the interesting thing, we just did an IPO using Reg A for a preferred share onto the NYSE American. We just raised $54 million for them. We did that on September 30th. And with a little bit of luck, I don't know when this is going to re-air, if it's not being aired live right now, but hopefully the government will be open. We're doing a $40 million IPO onto the NYSE for using Reg A for a space technology company, and that hopefully will be out in the next 2 weeks. So we're really seeing exciting entrepreneurs, exciting companies, dedicated entrepreneurs being able to raise capital from the crowd in meaningful manners.
So, Mark, I find it personally quite interesting that in an era where everyone's saying media is dead and media can't survive, you're actually finding a way to get success with media in the sense that media ownership is changing hands in this sort of instead of being concentrated, you're actually taking existing brands and moving the ownership to the people, right? So,
Yeah, I mean, listen, some of the brands that we're working with, there's a passionate following, whatever political party that you follow. I look at myself more, I hate to say like more like an arms dealer. I'm Switzerland. I sell to the left, I sell to the right. But the reality is it doesn't matter where you stand on a political side. It's that you have a passion for the brand.
mhm,
So there are brands that are followed by people who want to support them.
mhm,
And we saw with Newsmax, it was a little known brand. If you knew who Newsmax was, you followed it.
mhm,
But what ended up happening because of the offering is a whole new group of individuals who had never heard of the company suddenly started to become aware of it because of the stock side, which translated into viewers, which translates into Nielsen ratings, which translates into additional ad sales and revenue. So it's a self-fulfilling prophecy. And we're finding this with media that there is so much opportunity in the way content is delivered, the way content's received. And if you think about the beauty of Reg A, there is no quiet period. You have the ability to communicate real time. And this was our biggest issue that we had with S1s and traditional IPOs. How do you go into a quiet period in a modern world when everybody's communicating, you're glued to their phones, getting content, people don't even watch the news anymore. They get their news from TikTok, which is ridiculous, but it still happens. And if it didn't happen on TikTok, it must not have happened. But that type of passion translates into supporting companies and
right.
using modern techniques, you can communicate that way. I was able to go on air on Newsmax every time we'd go on. I did eight shows a day, and we'd raise $3 to $5 million a day. That's a huge power.
And I think part of embedded in your message is the fact that many of the people who are most successful with crowdfunding and many companies are not just looking as a source of capital growth, but they're looking as a chance to really expand their audience and expand their customer base or increase the loyalty. There's like this ancillary benefit that's really, really important and sometimes central to companies. And that's something that's really can be achieved through one of the crowdfunding exemptions. You can't do that otherwise.
No, you
So
can't. And like we're doing that. I'm also a merchant banker in addition to an investment banker. I work on a non-regulated side where we have ownership in crowdfunding opportunities. And I don't do crowdfunding from a regulated standpoint. I'm not licensed to do so. But as a principal investor and owner of businesses, I love crowdfunding in that sense. We're about to launch a deal with James Harden and some other sports figures. So, that is a group that is really, really keen, have a large following. If you're a sports enthusiast, now you can get involved with your favorite athlete. We tried to do a movie with it. We're doing I own an apparel brand. It's great because we can utilize when you're checking out to buy some of our shorts, you can now buy some stock. It's
that's
it's
great.
awesome,
That's great.
but
Side by
it
side.
builds that brand.
Right. That's
Brian, if I
fantastic.
can just jump in 1 second, I have a hard
One
stop
second,
at 3 with.
Scott. Yeah.
Okay. Yeah.
Yeah. 1 second, Scott, if you want to jump in real quick, because we're about to wrap it up.
Yep. Yeah.
Uh,
I was just going to say, we did not plan this in advance. I want to let everybody know, but we have an amazing ladder of progression of the success of crowdfunding just represented in this call, from what Paul's doing across the board with small investments and in large scale to Gene, to Brad, to Mark. You've really identified what we've been pushing for years as a message, which is people of all walks would take interest in investments of this scale. So really, I can't. I'm very happy with this call, and I'm very pleased. Brian, thank you for organizing such a great discussion.
Yeah, and we do have to wrap up. I think one takeaway we might leave, and we don't have time we could go down so many parts of this discussion, but for those people, this really isn't a niche sort of experiment. This is really a growing movement, and you're all part of it, and we like to be part of it. And so it's wonderful that we can share knowledge and that you all have such great, rich experiences that you can share with others. So we encourage everyone to stay engaged and to work with the association and to learn from these individuals. Thank you all for attending. You all deserve your recognition. So thank you so much for being a part of the industry. And with that, we'll sign off for today. So
Thanks,
thank you,
Brian.
everyone.
Thank you.
Thank you.
Okay.
Bye-bye.
Bye, everyone.
Bye-bye.